Hi, I'm Vic. Welcome back to Investor Insights. And this time around, I want to talk about stock picking. First things first, most important question of all, what's a stock? That's a very simple definition. A stock is a little piece of a company. And buying a stock is just like buying a partnership into a business. So the most important thing when you go into a business broker with a sack full of money to buy into a partnership with whoever is your due diligence. A lot of people don't do it. They get a stock tip from the taxi driver or the local butcher, bad mistake, or they hear a favorable news article on the evening news or on the internet somewhere and they think, sounds pretty good, I've heard of it. Yeah, okay, I'm going to jump in. That's behaving like a lemming. And you know what happened to them? They all got killed. Just because a stock is going up and it has momentum doesn't mean it's a good investment. And one of the most important factors that people discount before they make any stock investment is the downside. And the downside is what gets you wiped. All your hard-earned money can disappear overnight if you pick the wrong stock. It's happened before, it will happen again. Fortunes were lost during tech wreck because of all this exuberance into these .coms. Look at the stock market now. There's so much exuberance in a low growth environment with all these quantitative easing around, with all this free money. Of course stock markets are going to go up, but they're not going up for the right reasons. The wrong stocks are leading this rally and people are piling into these stocks. Do not act like a lemming when it comes to stock picking. You have to make the decision yourself based upon your research. And you have to do good research. Don't just hear it Chinese whispers from whoever. You got to read into it. And you got to talk to people in the know. You got to talk to an advisor. Don't talk to an accountant. The most important thing is work out what the downside is and what your upside is. So I can tell you right now that if you put money into most stocks on the ASX 200, into the S&P 500, your upside is probably going to be, from these levels, who knows, 5%, 10% if you're really lucky. But your downside, you could be looking at 50, 60% downside. Now, if you walked into a casino and you were told that a game you were about to play had odds of 50-50, you'd have a punt in it because, you know what? Heads you win, tails you lose. It's a pretty even bet. But if I told you that there was a game where you walked in and the odds of you losing was 6 times that of you winning, well, you know what? You're not going to play that game. So therefore, why would you buy these overpriced stocks in this current environment without looking at the downside? Because it's all rosy now when things are going up, but they're all going up for the wrong reason. So before you make a stock picking decision, think of it as an investment, a partnership with the management of a company. If you do not understand the company, do not take part in it. Another point I'd like to make about stock picking is timing. This is a very important aspect of stock picking a lot of people don't think about. Because incorrect timing can lead to huge losses. I can spend all day discussing examples which I myself have had the fortune or misfortune in taking part in. We all make mistakes. But I'm not going to dwell. The most important thing when it comes to timing is understanding the downside. Anything else might make a lot of sense, everything could be all rosy, but if the investment climate is not good and you happen to get in and the floor falls from beneath you, it could be the best company in the world, it doesn't matter. You're going to get wiped. So therefore, timing is of the essence. A lot of people talk about you shouldn't time the market, it's time in the market rather than trying to time it, blah, 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 rah, rah, rah. It's not important. Time in the market means nothing. What happened between 2008 and say 2010? If you had that time in that market, man, you would have had a great time because stocks rebounded. But what happened to a lot of big cap companies like BHP in the past 2 years? I mean, they're down about 1/3. And that's the largest company on our stock exchange. Why? Well, there's many factors. China's slowing down, and therefore resources prices are falling, and so forth. You have to understand when to get in and when to get out. And therein lies another point. You have to have an expectation out of your investment. If you bought part of a business, you want to know how much you're going to get out of it. That's human nature. So when you buy a stock, you want to know what you're going to get out of it. You don't buy a stock for the sake of just buying something. Man, buy a car, enjoy it. At least you're going to get some enjoyment out of it. Stock picking could be a real hair-pulling experience if you do it wrong. Know your expectation. If you get in at something at $10 and it gets to 15 and it looks a bit rich, or the market's topping out, or its growth prospects are sort of winding down, you've made 50%. Oh, inflation running at 5% a year, you've made 10 times inflation in say a year, mate, I'd be getting out. It doesn't matter what the taxation implication is. Don't think about that. Only think about making 50% on your money. So as I said before, timing is critical, expectations is also critical. And I think the most important thing, one of the most important aspects of stock picking or stock investments is learning to let go, especially when you've made a mistake. Now, you're living through a bubble right now. This could be the biggest bubble yet. So if you buy into something and it may have worked for a while, but now it's not working anymore, and you're stuck with this mentality that it will come good, well, guess what? Once the momentum changes, it's not going to come good. You're going to get killed. Look at investors who bought into JB a few years ago at nearly $30. It went to 8. It's now about 11 or 12 if you're lucky. How long do you have to wait before it goes back to 30? That's called being married to a position. Don't get married to a stock investment. If it goes bad against you, if it doesn't seem to be going anywhere, which means you're actually lucky if it's not moving, but if it's going against you, you've got to learn to let go. And it's a culmination of everything I just said. That's the art of stock picking. More importantly, what I've just described are just the mindset and the thinking aspects of stock picking. In subsequent videos, I'll be talking more about the technical aspects of looking at stocks and understanding stocks. Subscribe if you like these videos. Feel free to drop me an email at any time at realistic.investor.insights@gmail.com. And I look forward to talking to you next time.